Let's be real. Tax is one of the most important things that you need to understand in the crypto space because at the end of the day, we want to keep as much money as possible and minimize the amount of tax that we're paying on the profits that we make in cryptocurrency. So this video today is really going to dive in deep to the simple questions, to the more complicated questions, more specifically here in Australia and what that means for tax, but also you friends overseas who also maybe have some questions for tax and might need a little bit more information or a specific platform to use your tax and your crypto transactions to start understanding where you currently are and where you might have some potential tax debt moving forward. So here we go, guys. All my favorite tax secrets compiled into one video, and you can sign up for CTC down below. Before we jump in, guys, quick disclaimer. None of the information in this video is taxable or financial advice. It's for educational and entertainment purposes only. Please talk to your accountant if you have any specific questions. Hey guys, so I've got Matt here from Crypto Tax Calculator to join me today. He's just going to give us insight into sort of how to stay on top of your tax, things that you might not think are taxable events, how to use CTC. That's my favorite platform. I've been using that now for a couple of years for tax purposes in crypto. Matt, thanks for joining me today, mate. Much appreciated.
Thanks, Greeny. Thanks for having me. It's always a pleasure to jump on a show and talk taxes. It's definitely not the most exciting topic, especially from everything you discuss. You know, you're very involved in the Pengu ecosystem. You pick a lot of good trades out there. But yeah, it's taxes. It's something that you have to do. So hopefully we can spread a bit of knowledge and just make people understand that it is something you have to pay, at least if you're in Australia, unfortunately.
So I suppose like the first real question is like, do I have to pay tax on crypto in Australia? Is it a taxable event? And what actually triggers a taxable event in crypto?
The short answer is yes. Crypto is absolutely taxable in Australia. The ATO, they see it in, I guess, they see it as a CGT asset. So it's similar to shares, similar to property. And with that, there's two key components of it. The first is capital gain. So anytime you sell a coin, whether it's for another coin or back into fiat, that will trigger a capital gains tax event. If you sell an NFT for another NFT or sell it back to a token, that also triggers a CGT event. When you deposit into smart contracts, that as well. And let's just say you go out, you've got a MetaMask card, for example, or debit card, go out, you buy a coffee using crypto, that can also trigger capital gains there. So that's the first aspect. The other side of the coin is income. So the way to think of this is anything that is earned, I'm talking staking rewards, airdrop, mining rewards, anything that is earned is generally considered income. As opposed to acquired, you know, if you're buying and you're selling, that's capital gains.
Yeah, excellent. Okay. And what about if I am putting money onto a platform? So say, for example, I use SwiftX. That's my platform that I use to onboard my Australian dollars. If I put my Australian dollars from the bank onto SwiftX, is that a taxable event or is it only once I purchase a crypto?
It's only once you sell the crypto. So you just get in your Aussie dollars, chucking it onto SwiftX, and even buying, you know, BTC or ETH, you haven't been taxed at all at that stage. But once you sell your tokens or your NFTs, that's what's going to trigger a capital gains tax event.
Excellent. Thanks for clearing that up. I suppose the next question for me is if I'm transferring, say some Ethereum, I want to buy a NFT on chain and I've got Ethereum on my SwiftX wallet and I want to send it to my MetaMask wallet, for example, is that a taxable event or is that just a transfer from one personal wallet to another?
If you still have ownership, it is not taxable. That being said, this is a bit of a funny one. If there's a gas fee involved, the gas fee on that transaction is subject to tax. So the reason why is, let's say you've spent $5 in Ethereum. When you spend ETH as a gas, what you're actually doing is you're selling your Ethereum in order to use it for gas. So same as I said before, whenever you sell a crypto or an NFT, that triggers CGT. So yeah, if you transfer, just keep in mind to look at whether there's a fee involved, and that's sort of an indication on whether you might see a tax event on that.
Excellent. Thanks for clearing that up as well. I suppose one that's been really prevalent over the past few years in crypto is airdrops. So I think let's touch on that again, just specifically. So for example, I've probably had 5 to 10 airdrops this cycle, something like Jupiter, Magic Eden dropped some money, Pengu plus the Cato InfoFi ecosystem had a few airdrops. So how does that work specifically in Australia? So am I taxed at the rate that I received the airdrop? Is that my cost basis if it then goes up or down? Answer me that because that's a really big. I think a lot of people misinterpret how to understand the taxable event of an airdrop.
Yeah, good question. I think a lot of people receive airdrops and they just go free money, don't owe the
Yeah.
government anything, which would be nice, but unfortunately that is not the case. So the ATO, they see airdrops, they consider it as income at the market value of the tokens at the time you receive them. So let's say you received Jupiter, it was worth $30,000 as soon as it touched your wallet. That's what the ATO looks at and says you have to pay $30,000 worth of income tax. But there is this exception to the rule with something called initial allocation airdrops. That's when you receive an airdrop, but the tokens are yet to have a market value. So, in other words, the tokens aren't trading yet. It is pretty, it doesn't happen often at all. I don't think I can even think of an example of anything that will come under it. But if that is the case, then you're not subject to income tax at the time you receive those tokens.
Okay, so in theory, when I received my Pengu airdrop in December last year, and say that was worth 50,000 Australian dollars, I should probably realize that gain straight away. So then I have the money in my account to cover tax. And then if I wanted to, obviously buy back that token because I'm bullish that it probably goes up higher from there, I should probably buy back into it as a separate new trade because that way I have protect myself and I know that I'm then making a decision to buy back into that token at that cost basis. I think where a lot of people go wrong with airdrops is they get a big airdrop, they hold on to it, but then it dumps. And Pengu did actually dump. I'm not sure, maybe 60%. And if you sold the bottom, then you're still liable for the tax correct at the first point of what you got that airdrop.
Yeah, that's exactly right. And it's actually quite sad to see. Like, I've spoken to a lot of our customers who they received six-figure airdrops and they hold it all the way down to zero.
Goodness.
And then they're left, they have to pay income tax on, 100 grand or whatever it is. And they have literally nothing in their crypto portfolio. They can't fund it. So, yeah, you're exactly right. If it is the case, you received a big airdrop, you want to protect yourself from a tax point of view. Yeah, sell that straight away, buy it straight away. And that way, you're only subject to capital gains tax.
Okay.
Once you sell that off.
Excellent. Thanks for that. I think a lot of viewers will appreciate that specific point. Okay, so if I own Ethereum and I want to rotate that into Solana, now I know from experience that that in itself is a very complex sort of taxable event too, because obviously if I bought, say, Ethereum 5 years ago and now I'm buying Solana today, like there has been discrepancies there across how much I've made potentially on Ethereum. Do I owe tax if I transfer from one cryptocurrency asset into another cryptocurrency asset?
Absolutely. Anytime you dispose of a token, whether it's for fiat, for another crypto, or for an NFT, that triggers a capital gains tax return. So what the ATO will do is they'll see how much you bought that ETH for, and they'll see the value of the ETH when you swapped it for the Solana, and then that difference there, that's your capital gain or your loss. I think something that a lot of people don't understand, or a big crypto tax myth, is it's not taxable until I cash back into fiat. And that's an absolute myth. Anytime you swap for another token or an NFT, that's where you're liable to tax. It's not only once you're back into Aussie dollars or back into US dollars in your bank account.
Okay, excellent. Thank you. All right, next question. Can I claim tax losses for rugged projects? Maybe it's an NFT, maybe it's a meme coin, or any scams where maybe I had a hack or my wallet got drained because I clicked a phishing link. Is that a taxable loss? And how does that specifically work?
Good question. I'm unfortunately one of these victims, and I'm sure there's some of your audience who might be too. But look, if it was a rugged project, you'll need to prove two things. So, firstly, you need to prove that your token or your NFT is not worth anything anymore, and you also need evidence that the project has shut down. So, whether it's some sort of disclaimer on the website, whether it's all over Twitter, any screenshots you can send. It might seem really weird just taking screenshots,
Yeah.
but screenshots put into like a Google Doc, and that's your evidence. And then if it was a scam, you'll need to prove that you don't have access to the tokens anymore. Like, your wallet got drained, for example. And you also need to prove the loss by showing that there actually is like an outgoing transaction,
Yeah.
whether it's on the blockchain explorer, for example, or you can see there's a scam address that has actually taken your funds. that's going to be your evidence. So if you can provide some sort of evidence, then what you can do is you can enter a disposal of $0, and you can actually do this on Crypto Tax Calculator. You can enter in a disposal of $0 and claim a total capital loss. So
Amazing.
yeah, it's all about evidence and coming with
Yeah.
receipts. Like if I just put my hand up and say, "Hey, I lost $1 billion," they're gonna say, "We feel sorry for you, but provide something at least."
Yeah.
Yeah.
Okay, so and I'll talk on that because I've had that recently happen to me where I got scammed, unfortunately, and I did the same. Where I got blockchain explorer evidence that shows that my liquidity, my crypto across a range of different assets was transferred through mixers, through DeFi protocols, and out through random exchanges that aren't KYC. So that should be enough. Police reports as well, obviously, are great evidence to show that you have at least applied for that. And that is a really good way to go about it. And that helps your accountant as well understand what's going on. Okay, what about if I use a dodgy exchange and I can't access my records for tax purposes? Like, what should I do in that scenario?
Unfortunately, we do talk to a lot of customers who are victims of FTX, victims of Celsius. It is a tricky one because it does depend case on case. But the first step you want to do is you want to gather as many records as you can. Obviously, the exchange might have gone under, so you don't have access to even log into your platform anymore. But you should have some sort of bank statements that shows, hey, you deposited $10,000 into FTX. You might have screenshots or email confirmations from the platform when you did the transaction saying, hey, you bought 5 BTC, take a screenshot of that. Blockchain explorers as well, go on Etherscan, go on SolScan, whatever exchange, so whatever blockchain you're using, type that in and you should have a lot of evidence from there. So you want to do everything you can to actually show that you had funds in that exchange. Once you've done that, this again isn't financial tax
Correct.
advice, but what we've heard people say is you want to do your best to estimate, your transactions, your portfolio value, really as best as you can based on those records that you've gathered in the first step there. So if you can do that, at least the ATO is saying, hey, they've come out with an estimate based on this and it kind of lines up. And then if it was an exchange collapse like Celsius and your assets permanently lost, then you might be able to claim a capital loss as long as you can show, your proof of account ownership, so email confirmation, username, you had records of deposits into the exchange, and also if you have any public reporting of the exchange collapsing or rugging, then that's also going to help your case there. So you will be carrying your capital losses forward for
Yeah.
sure.
Okay.
But yeah, whether you record it based on the time you've lost it or in future years, I'm not sure. But the losses itself will definitely get carried forward.
And again, guys, always chat to your accountants about these specific scenarios and questions if it is obviously applicable to yourself. This is just general conversation here. Okay, a couple more questions and then we'll wrap it. If I give crypto to my partner, to my friend, what are the tax implications there?
Yeah, the beautiful thing about receiving crypto is that you're not the one who's getting taxed straight away. It's the person who's gifting the crypto. So let's say you send me crypto, you'll get taxed at the market value of whatever tokens or NFTs you've given me at the time. So you will incur a capital gain or loss. And then me, I'm receiving the gift. I don't actually get taxed until I dispose of the crypto.
Okay.
So let's say you give me one Ethereum, it's worth $1,000 when you give it to me. That $1,000 that forms the cost basis of that purchase there. So that means when I go to sell that ETH later on, let's say I sell it for 10,000, then I will incur a capital gain of the difference there, which is $9,000.
Okay, cool. And is it right if I hold a crypto asset, whether it's an NFT, a meme coin, Bitcoin, for example, for over 12 months in Australia, I get a capital discount on that tax?
Correct. And that is a really big incentive. So I think the biggest marginal tax bracket rate in Australia is 47%.
Yep.
So if you hold for 12 months, you're paying 23%, which again is more than zero, but it sounds pretty good when you compare it to that 47% there.
Yeah, very much so. So if you are investing longer term, it always probably pays dividends in the future with tax in Australia. So can the ATO actually see my crypto activity? Can they track my on-chain transactions? Can they track all my meme coin plays, all my NFT trades? Talk to me about that.
Yeah, everyone thinks the ATO doesn't know anything. They know a bit. I have to give credit to them where it's due. But the first thing I'd say is when you get into crypto, in most cases, you're onboarding via some sort of exchange, whether it's like SwiftX, Kraken, Binance, whatever you're using, and you need a KYC on those exchanges. So by default, they've got all your information. They've got a picture of your driver's license, your passport. They know who you are, and that information gets reported to the ATO. So I think as up until now, it's just been the local Aussie exchanges like SwiftX, like CoinSpot, where they have to give the information. There's this thing coming out called CAF, which stands for Crypto Asset Reporting Framework, and that means at the on the 1st of January 2026, all international exchanges will be reporting back to the ATO. So if you've got a Kraken account, they'll be reporting back to the ATO. If you've got a Binance account and so on. So because all exchanges have that information, it doesn't matter whether you're transferring your funds from an exchange to a ledger,
Mm-hmm.
they can see that transaction there. And that goes to my second point. The blockchain, by definition, is an immutable ledger, which means every transaction you make is permanently recorded and publicly visible. So even if you've onboarded via SwiftX, you've moved everything into a cold wallet, that transaction is public to literally everyone in the world. It's no secret. So, if you think you can hide, you honestly can't. And on top of that, you've got companies like Chainalysis where, they're doing forensics. They're looking at all this money transfer. They're connecting different wallets. That is literally their job to track, fraud and people who are evading tax.
Yeah.
So it's unfortunately, there's not really any place you can hide.
Yeah. And I suppose to follow that specifically too, if I sign up for a non-KYC exchange, they can still track my money moving on to that exchange and then the money off of that exchange if that occurs, correct?
Yeah.
Okay.
Yeah, correct.
Cool.
And there's more to it, like IP addresses,
Yes.
that kind of
Yeah.
stuff. So it's not just KYC. There's always going to be something they can track you off.
Yeah. So it always pays to be a good person, guys. All right. So where can I go to find a good tax software? So obviously you work for Crypto Tax Calculator, and we'll bring the platform up so we can show a visual to everyone who's tuning in. How does that work? Give us a bit of an overview of what that looks like for people who want to jump in.
Yeah, so there are many tax platforms out there. Obviously, I work for CTC, so I might be a bit biased, but I do think we are definitely one of the leading platforms out there. And the way it works is we have software to automate as much of the process as possible. If anyone here has done their crypto taxes manually in a spreadsheet, you can probably vouch that it takes you a lot of time. It's extremely stressful. And by the end of it, you're just never going to want to do it again.
Yeah.
With software, the whole goal is to save you a lot of your time. So you can spend more time, dabbling in the abstract ecosystem, trying to get more XP, right?
That's it.
So the way it works is the first page that comes up is this accounts page here. We support over 3,500 integrations, so exchanges, wallets, blockchains. Let's just say you're using SwiftX, for example. Go ahead, type in SwiftX. Then here you can either connect your data via API keys or CSV files. What we ask for on the right-hand side is instructions to get that API key from whatever platform you're using to upload into here. Likewise, same with the CSV file. And all we're asking for here is read-only access. We're not asking for, trading access. We're not doing anything crazy in your account there. We're just reading the data. Then likewise, if you've got funds on chain, let's just say using a MetaMask wallet, very simple. You can just copy and paste your EVM address into here. Then what we'll do is we'll read all the transactions from the blockchain explorers and pull them into here. Once you've imported your data, you can go to the transactions page to see how these come up. So you can see here, got a bunch of staking rewards from Kraken. You can see any fees, the value, capital gains or losses, all of that gets displayed here. The review page, every now and then there might be some manual input needed from your end. And the reason why is crypto isn't like stocks. Stocks, you get a very clean, end of financial year statement. The ledger is very simple. your buys and your sells. Crypto, you've got all sorts of stuff. There are a lot of degens out there who are bridging, they're doing ICOs, flipping JPEGs. The data there is quite messy compared to traditional finance. So every now and then you might need to come in and just fix up a few things. What CTC does a really good job of is actually identifying, missing data, what you need to manually add into the system. And we sort of hold your hand through this process. But once you've gone through all of that, you can go to the reports page and generate the reports you need. So we date the reports all the way back to 2013, which is really good. I know a lot of DJs out there who have not reported for like the last 7 years,
Yeah.
which is incredible, but you do have to do them. So, as long as you have a subscription with us, you can go back into any tax year, download the reports. If you're in Australia, we have a special ATO My Tax report. If you're in the US, we've got the special Schedule 1, Schedule D, we integrate with TurboTax. So based on your country, you will have different reports. And then the last thing I'll say here is we've also got this portfolio view. So here you can see your current balance in your portfolio, any unrealized gains, losses, and you can see your current holdings. So we do have a tax loss harvesting feature where you can see just which NFTs, which tokens have been smashed. You can potentially sell these down in order to offset your capital gains and minimize your tax bill there.
Yeah, wow. I didn't even know about the tax loss harvesting tool there. That's amazing. I definitely will be looking into that one. Mate, that's really good. So if people are keen to sign up, guys, there is a link down below. It gets you a little discount. That's the partnership that I have with people who tune into the Greeny brand and the ecosystem of GTG. Matt, is there anything else you want to cover today? I pretty much think we've covered most things. If you do have any questions, guys, where could you potentially go to reach out to classify maybe a chain or a new opportunity on CTC or just a general question that they might have?
Yeah, we've got a very active support team just in the bottom right corner here. These people, they're all training crypto. A lot of them are heavily invested themselves. So if you send them a message that's a bit complex or complex transaction type, most of them should have a pretty good idea and be able to help you, or at least point you to the right person who can help you from there.
Amazing. I think that's everything. Thanks so much for your time, mate. And guys, if you have any questions, comment down below. More than happy to help you out where I can. And then obviously, if you have more specific questions, jump onto CTC using the link down below and you can start chatting to one of the pros on that platform. Matt, thanks so much for your time, mate. I'll end the video very much there.
Awesome. Thanks, Greeny. Appreciate it.
Cheers.